Now that we have a basic understanding of the different types of government revenues and expenses, we can now look at what a government budget will look like and also review what the three outcomes can be. The budget can be balanced, it could be in a deficit, or it could be in a surplus. So we have two pictures here. On the left is Australia as a whole, and on the right is representing the government. And all of the revenues flows from Australia into the government, and anything that is expenditures or is expenses flows from the government back into the country. And so the reason why we have a budget is because the government reviews its projected expenditures and revenues, and based on that, it is going to have an overall position for their budget. And so there are three possible outcomes given this scenario. The budget can be in a surplus, and this is when the government revenues are greater than expenditures. There could be a balanced budget where the government revenues and expenditures are exactly equal. And lastly, the budget outcome can be in a deficit where government revenues are less than expenditures. So that's the easy part. The more difficult part is actually interpreting what a budget looks like. It's going to look a bit scary, but we're going to take it really slow and try to highlight what part of the budget are we able to solely focus on, and how can we use that information to make judgments on what the budget outcome is going to be. Now, before we look at the actual budgets, it's important that we review the differences between the words receipts and revenues. And so anytime we're looking at the word receipts, it only relates to cash, and cash transactions are more related to short-term payments. And so this is going to be payments that is within a 12-month period. Now, revenues is different, and for those that study accounting, you should know what the accrual basis means. But the revenues includes cash transactions, but it also includes credit transactions. And so if we're expecting a certain payment maybe next year, or maybe we're expecting to make a payment next year as well, if we know that these things are going to occur, then we can include it in the current budget, knowing that certain inflows and outflows are bound to occur. And so based on the budgets, they do tell a slightly different story. A budget relating to cash is always about 12-month period transactions, whereas a revenues and expenses includes some transactions that go beyond that period of time. So how this is going to work is I'm going to tell you the different indicators that a budget can show. And in the next slide, we're going to look at the 2022-23 government budget. And the budget we're looking at is the one published by the Morrison Government. And so these figures are subject to change. However, at the time of the recording, there is no other budget that we can refer to. So two key indicators. The first one is the fiscal balance, and we're looking at the differences between revenues and expenses in the same period. And so the fiscal balance adopts an accrual approach, meaning that the revenues and expenses are recognized regardless if they've actually been paid or received. And so there are two outcomes. The fiscal balance can be in a negative, meaning that we are spending more than we are earning, or it also could indicate that we have insufficient amounts of savings. However, a positive fiscal balance is the opposite, where we have enough savings and we're able to finance our economic activities through the money that we already have. Now, secondly, there's the net operating balance, and it's essentially the same as the fiscal balance. However, it excludes purchases made on non-financial assets. And so the reason why some of these types of assets are excluded is because while we on paper and in documentations recognize that we have received a certain inflow or outflow, these values may not be re-injected into the economy, and is simply value that we have accumulated over time. And so we can kind of ignore it because it's not actually money that the government ends up spending, or is money that the government has actually earned. So on this slide here, we're looking at the real budget, and I've highlighted the main things that we should be taking note of. Now, it looks scary, and there's a ton of numbers, and it looks very, very confusing. And so let's think about how we actually read these budgets. And so it's broken up into distinct sections. On the top here, you can clearly see that in the yellow, it relates to revenues. And my tip is to simply look at the total value first. And so what all of these numbers are, if you're thinking about the story these numbers tell, it's saying that the total revenue is 560 billion. Remember that this is denoted in millions, so this is actually representing billions of dollars. So out of this $560 billion, how has it been made up? And so if you're reading this, it's pointing out that, okay, 520 billion came from taxation revenue, 18 billion came from the sale of goods and services. And so you read the line item on the left here to see what it relates to. And you can go down the list. And so interest income on the left here, you read across, And so in the year 2022 to 23, the government was expecting that we would receive $3.75 billion in revenue from interest income. And so once you read all those, it gives you a total. And the same story applies for expenses. As I mentioned, I recommend trying to identify what is the total expense. And so what you can see here is that we are spending $628 billion in this given year. And out of this 628 billion, it is broken up into all of these different figures. And if you're asking yourself, what do these numbers mean or what do they represent? You can read across and you can see that this 23 billion relates to wages and salaries. And this could be for, public workers. Another 7 billion was contributed through superannuation. So we're expecting to pay this much in superannuation in this given year, so on and so forth, with all of these other items that you see on this list as well. And so what does that leave us? We are looking at the budget outcomes, meaning that we can kind of bypass all of these different types of items and simply look at the balance numbers. And so we're looking at this blue section here. And so anytime you're seeing a negative number, what it's representing is that we are spending more than we have earned. And so anytime you're seeing a negative value, this is going to represent a budget deficit. And if these numbers were positive, it would mean that it is a budget surplus, indicating that we are earning more relative to the amount that we are spending. And in the very, very rare case, if these balanced figures were exactly zero, then we would be in a budget balance. But realistically, a budget balance is never going to occur. And so to make this budget look less confusing, let's exclude all of these line items here. And let's condense the budget to see what the total is actually going to look like. And so I've scrapped all of the expenses. We can scrap all of this. And our main focus is once again, simply looking at the totals and the net balances. And so what we're seeing here is the net operating balance. However, we introduced the second type of measurement that is important, and that is the fiscal balance. And so recall that it is excluding all of these things here. And so if you're excluding something, if you think about it mathematically, to exclude is to minus. And so if the total acquisition of these non-financial assets is 11.3 billion, then we actually minus this number off from 67 billion, and the new fiscal balance is going to be negative $78.841 billion here. So once again, highlighting that we're only concerned with the total values. As I've mentioned, we can also look at the cash side of things, looking at receipts and payments. So the headline cash balance represents the difference between the cash outlays and the cash revenues from all sources. And for the headline, it includes all types of transactions. However, the fourth key measurement, the underlying cash balance, very similar to the headline cash balance, but much like the fiscal balance, there are certain transactions that we exclude. And so for these ones, we're typically excluding volatile and one-off items. And so an easy example of a transaction that the government will exclude in this underlying cash balance is any investments that were made in financial assets for policy purposes. Another way of thinking about it is excluding items that do not have a direct or immediate impact on the economy. And so the underlying cash balance gives a more realistic financial position of the government. So let's be really careful and dissect this budget. And so this is the cash flow statement. And once again, it looks very, very confusing. We are not required to ever have to construct a budget statement like this, nor will we ever have to interpret a budget that is this long. I've highlighted all the key points that we should be aware of and thinking about how we can actually interpret them. And in blue, right at the bottom, looking at the headline cash balance, that is what our main focus is on. And also, of course, looking at the underlying cash balance as well. So instead of looking at revenues, we see that the total receipts in terms of cash is going to be $547 billion. Now, this is not separate to the revenues that we expected. This same figure would have been included in the revenues figures. So if we go back and look at the total revenue here, we're not adding this 560 billion to the new figure of 547 billion that we saw over here. it is more accurate to say that of this 560 billion in revenue, 547 billion of this figure is related to cash transactions. And so for accounting purposes, cash flow statements kind of separate different types of activities. And so you have operating activities, you have cash flows relating to investments of non-financial assets, and you also have receipts from financing activities. But let's keep it simple. We're only looking at the total operating payments here. So we're making cash payments of $604 billion. And so the net figure for specifically net operating balances is here. And with a bit of simple maths, we can also add all of these different figures up all the way down. And what you get is the total of the underlying cash balance. And so remember that this value has excluded investments in financial assets for policy purposes. And so what you can see here, and the budget has done it conveniently for us, is that if we're looking at the headline cash balance, we need to add this back on to derive at this figure. And so you can think about the headline being the total of the underlying balance here plus this as well. And so this is going to give you your headline figure. And so like we did with the fiscal balance, let's just highlight what are the key line items for the cash balance. So you've got, obviously, you want to look at all the total receipts. You want to look at all the net cash flows. And so you're just adding all these numbers up. Once again, looking at receipts, looking at payments, do a bit of maths, and you're going to get these figures here, which is what our main focus is going to be on. Okay, and so when we're thinking about the key knowledge point of budget outcomes, we're only concerned with this section here. And the conclusion is that if these final values are negative, then we are in a budget deficit, and if they are positive, then we're in a budget surplus. So that concludes this video. There are three main budget outcomes: a balanced deficit or a surplus. There's also a skill required to be able to read very simplistic budgets. And hopefully by the end of this video, you can now determine what the budget outcome is. And that's it for this video.